Hi everyone, welcome to the Buffett and Beyond Stock Market Recap for January 24th, 2026. We're in the middle of earnings season. There's a World Economic Summit going on, and boy oh boy, you couldn't have asked for a more volatile week than the week we just had. But remember folks, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. Well, this week the market, it's done nothing this week except drop violently to record the worst day in 3 months and then bounce back to end the week just about close to even. And weekly stock analysis video, well, Mercado Libre, short for MELI, and that's the stock symbol also, is the Amazon of Central and South America. And with the potential opening of more of the Venezuelan market to this company, the stock jumped this past week nicely indeed. And yes, it's in our portfolio. And our ETF top stocks are beating the S&P by a large margin. Of course, we're only 3 weeks into the new year, but it's nice to be on top. Housing is up, but we're really not too excited about it. We'll show you why. And let's look at the S&P 500. First of all, we come over here to the right, and we can see this week where the market dropped down, and we talked about this in the daily letter. It dropped down, closed below this bottom band, then the following day opened up below the band and then closed up, and there's a 50-day moving average, which I'm not showing here, but this indicator or this travel for the day was up above that 50-day moving average. And then Thursday and Friday, the market has really done not much of anything in here, sitting right on that 20-day moving average. So it really doesn't know where to go until something calms down or something gives it a direction. And down here, this indicator was definitely pointing down, and now it's starting to level off a little bit. So that's a good sign. But still, this market is undecided. It doesn't know where to go. And think about this, folks. It hasn't gone anywhere in about 3 months. So that's what we're up against right now. And when we look at the S&P 500 on this index up here, which is a longer or shorter term index than our intermediate term index, but it registers the high of the day versus the low of the day, and whether the market closes in the top part of the range or the bottom part of the range. And that has turned up. So we had a couple of good days. It turns this up, but we'll see. The market is just meandering around right now. And it was up before, then it was down a little bit, and now it's down just a tad. And I'm talking about the S&P 500, and we'll just see what it does. So it's going to close out the weekend with no commitment one way or the other. And the QQQs, they look a little bit better, actually. And we went over this in the ETF letter, and we can see that we're above the 20-day moving average and up nicely. These are the QQQs, and this represents the NASDAQ 100 ETF, and those are the top stocks that we get our top tech stocks from. And that is doing good. You can see that in the ETF portfolio if you're subscribed to it, doing very well indeed. And so the technical part of the market between the semiconductors and the technical stocks are doing better than the S&P 500. Right now, it seems to be more committed to be on the top half of this 20-day moving average. And for those of you who want protection all the time or even part protection, we have the February, the March, and the April puts. This is about a $200,000 portfolio. And some of you, or most of you, don't even use the put protection at all, which is fine. But here it is. These are the ones to have if you want to be protected, 12.5 to 15% below the market, just in case the market does something silly. So there's some protection there. And the QQQs, if you're more into semiconductors and tech stocks, these are the QQQs, the 3 options for a $200,000 portfolio, one for February, one for March, and one for April. And we protect with the QQQs, the NASDAQ 100 puts. So those of you who want to be a little bit protected, but just remember that the market is up 24% a year over the past 3 years. That's an awful lot because the market really averages about a 10% return per year. So we're running ahead of ourselves very definitely. But the reports that I showed you during the week, especially the one out of the Kiplinger magazine, everything that it says is positive. And so we think this year is going to be a positive year for the market overall. Yes, there will be ups. Yes, there will be downs like this past week. But overall, we think the market will rise because the GDP for the third quarter came out at 4.4%. That's exceptional. We'll see if that can keep going. So, folks, we had a very tumultuous week this week. Always remember that if you want to walk on this beach like Jimmy Buffett did at sunrise, then you've got to learn how to invest even better than Warren Buffett does now. So, folks, go out, be with your family. Just take it easy. Take your mind off the market. Most of all, be safe, and we'll see you right back here in a couple of days.